welcome to today's podcast on Risk Neutral, Retailing Financial Insights. Today we're going to be talking about 3 of the top home furnishing stores in America and the future of cryptocurrency in the retail sector. These may seem somewhat unrelated at first, but stick with me and you'll see how crypto could make an entry into being used more as a liquid currency. Now, with all that's been going on in the COVID-19 pandemic, we're finding that people are home a substantial amount more than in recent years. Of course, with that, we've seen a huge spike in the financial performance of home furnishing stores, surprisingly, as people begin to take a look at their personal spaces and invest in them to make them more comfortable as they both learn and work from home. The 3 companies I'll be discussing today are Kirkland's, At Home Group, and Bed Bath & Beyond, so let's dive right in. While Kirkland's stock prices are down a bit from previously in the year, the price still holds at a very steady rate and it's on the incline. They have a low debt to equity ratio at 2.04. This is a healthy ratio, suggesting the company does not have more debt than they should be able to handle, and their sales are not nearly as high as some of their competitors, but they're still a very solid company and shareholders are excited about the future expected growth. Now, as far as stocks go, the price per share has come down at just over $32 in the past 3 months. However, over the past year, the price has climbed from a minuscule $6.27 to $19.52. While Kirkland has taken somewhat of a slow decline in recent months, in the past month, it has remained relatively stable and even began to climb again. Many shareholders have even taken interest in picking up more shares since the price is still currently sub 20 and will likely climb over the coming holidays. The company's outlook is good as stocks remain higher than typical closing prices over the last 5 years. It looks like now is a great time to become a shareholder or purchase more shares of Kirkland. Now, referring to At Home, after learning of the recent sale of the At Home Group at a low controversial price, I looked a bit deeper into why the company may have done so. And upon analyzing further, I found the company has a much higher debt to equity ratio than that of its 2 competitors discussed, with a ratio of 3.53. It's desirable that this ratio be 2.0 or lower, but slightly higher ratios are acceptable for things like manufacturing. Since the company makes its own brand, it would put them in this category, but this is still quite a bit higher than its competitors and may be the reason the company decided to sell for such a low price. With that being said, the retail giant has still increased its sales the last year 27.3% to a whopping $1.7 billion from $1.4 billion in the year prior. I would still venture to say that it might not be a bad move to buy shares of At Home at this time because, as noted above, the price will likely only climb through the coming holiday season. And even considering the controversial sale, the future looks stable for the company. Stock prices are still expected to climb. Of all 3 companies, At Home Group has the highest operating margins, with an annual number coming in at 18.53% compared to Kirkland's 7.53% and Bed Bath & Beyond's at an astoundingly low 2.47%. This would suggest that the company is doing better than its 2 competitors. Now, Bed Bath & Beyond, as noted with Kirkland's and At Home, has seen a pretty substantial jump in stock prices over the course of the COVID-19 pandemic, raising from $10.81 in mid-December of 2018 to $27.24 per share presently. Bed Bath & Beyond shares have seen a sharp increase this year, with some states going back to increased regulations due to new cases of the new Delta variant of coronavirus, however, as well as swarms of college students flocking to furnish new dorms the upcoming holiday season. It would be reasonable to predict that the price of Bed Bath & Beyond shares will increase over the next several months. The current stock price has dropped slightly for Bed Bath & Beyond, however. Over the last few months, it has remained stable. When analyzing the company's financials, I noticed that they have a good a debt to equity ratio. The quarterly profit margin is quite low at just over 1%, and the quarterly operating margin is not impressive either at 4.6%. Annual calculations of 2.47%. A good time to invest, I'd say. Now, what does all this have to do with cryptocurrency? Well, as it turns out, as noted by Paxful, a platform which is used to make financial services more accessible to everyone, with over 300 payment methods available now, buying Bitcoin online has never been easier. From cash and banking transfers to gift cards and payment apps, you can select the option most suitable for you. Paxful has now employed a way to buy Bitcoin using Bed Bath & Beyond gift cards. You would simply buy a Bed Bath & Beyond gift card online or in store and send the gift card number and PIN via chat to Paxful. You'd mark your payment as complete and wait for the vendor to verify the code and PIN to get your Bitcoin. And this brings us to ask, when will retail giants like these begin accepting cryptocurrencies like Bitcoin as a payment method in their stores? Now, if I had to limit it to accepting one type of cryptocurrency at my business, I would choose to only accept stablecoins. My reasoning behind this is that stablecoins are backed by or attached to a reserve asset, an actual fiat currency, while other types of cryptocurrency are not. While it might take time to implement into a business like mine, which is a floral design and florist basically, accepting stablecoins could make business more profitable by helping to reduce some of the operating costs incurred by accepting other payment methods such as credit cards, which typically come with higher processing fees. It could also limit the possibility of fraudulent activity within my company, increase trust among vendors as well as customers, and lead to improved workflows. Investing in cryptocurrencies can also provide small businesses a chance to make decent financial gains between 4 and 12%. That being said, I do think this will take some time to move across all retailers, and it won't happen overnight. Only about 10% of the population currently is estimated to understand what cryptocurrency is, so I don't see them investing in something they can't see readily usable or understandable. It's likely that eventually most businesses will accept cryptocurrency in the future. The way things are currently going, people rarely carry cash anymore. Most use payment services such as Cash App, Venmo, and PayPal regularly, and things become more and more digital all the time. Having said that, at this time, I would not consider investing in cryptocurrencies myself. However, even leaving my personal beliefs aside, John Steinberg of Cheddar recently discussed that he's not sold on Bitcoin sticking around, as there's been a lot of volatility linked to cryptocurrency in general. Many do not want to make an investment in something that can have a random value assigned simply because others believe it to have a value, as noted by Tim Stanovic of Cheddar as well. And he refers to this as an intersubjective reality. He went on to say that people invest in crypto because others do it. That reminds me of the old saying which says, if your friends jump off a bridge, are you going to do it too? With so few people knowing very little about crypto, there is a high probability to incur substantial losses as well. And if you're into risk and feel compelled, you might stand to make some financial gains, but only time will tell if they'll stick around for the long haul. Well, that's it for today. Thank you for joining me. We've discussed a lot. I've given you some food for thought. Come back and join us in tomorrow's episode of Risk Neutral Retailers Financial Insights.